Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 153, recorded here on February 9th, 2025. Let's take a look at the Bitcoin data. We are at block 883067, Moscow time 1040. Fees are 1, 1, and 2. We'll start with the market news update outlook, then we'll get into the weekly top Bitcoin news. Talk about our featured post on Bitcoin Fortress Substack this week and the weekly top boost. So let's jump right in. Wall Street on Friday delivered a slight decline for a busy week that was marked by US President Donald Trump's trade war escalation, the fourth quarter earnings season deluge, and economic data on the labor market. Trump dominated headlines this week with his tariff moves. Last weekend, a 25% tariff on Canada and Mexico went into effect, but both North American nations showed a willingness to work, with Trump leading to a delay in the implementation of the tariffs. Trump also approved a 10% tariff on Chinese goods. The world's second largest economy, in stark contrast to Canada and Mexico, responded with its own duties on imports of multiple American products, including LNG, coal, and more. Finally, Trump on Friday said he was planning to announce reciprocal tariffs, where if any country puts tariffs on American goods, the U.S. will respond with the same exact tariff. The earnings season continued to garner headlines, and this week saw quarterly reports from major names such as Amazon, Walt Disney, Uber, and Qualcomm. Turning to the economic calendar, labor market data was in the spotlight this week. It culminated in the January non-farm payrolls report on Friday, which showed a moderation in job growth, but an unexpected downtick in unemployment. For the week, the benchmark S&P 500 slipped 0.2%, while the net tech-heavy Nasdaq Composite shed 0.5%. The blue chip Dow also fell 0.5%. All right, looking ahead, investors' focus next week will be occupied by consumer price inflation for January on Wednesday, followed by wholesale inflation data for last month the following day. Meanwhile, retail sales figures for January are due out on Friday. The busy earnings season will continue with consumer companies in the spotlight. Major names reporting next week include McDonald's, Coca-Cola, Unilever, Cisco Systems, and Applied Materials. The first estimate for fourth quarter GDP in the European Union is due out on Friday. All right, jumping into the Bitcoin news. No BS Bitcoin didn't come out with anything since Thursday, so we're going to go through the Good Morning Bitcoin from Thursday, February 6th. Um, the FDIC has released 175 internal documents on Operation Choke Point 2.0, potentially hinting at a new direction taken by the agency to allow banking institutions to operate in the Bitcoin and digital asset sector without needing prior regulatory approval. The records include correspondence between the FDIC and banks, as well as other regulated entities regarding crypto activities. The documents that we are releasing today show that requests from these banks were almost universally met with resistance, ranging from repeated requests for further information to multi-month periods of silence as institutions waited for responses to directives from supervisors to pause, suspend, or refrain from expanding all crypto or blockchain related activity, said Travis Hill, the acting chairman of the agency. MicroStrategy has rebranded to Strategy. The business intelligence firm and the largest corporate holder of Bitcoin will now operate under the name Strategy and has changed its logo to include a Bitcoin symbol. In the announcement, Strategy stated that the brand's primary color is now orange, representing energy, intelligence, and Bitcoin. We'll talk a little bit more about that a little bit later. France removed wealth tax provision that classified cryptocurrencies as unproductive from the 2025 budget proposal. Initially, the 2025 budget included plans to introduce a tax on unproductive wealth, which would have included cryptocurrency holdings along with various luxury goods and real estate. Pavel Durov's case in France won't go to trial for a year or more. Milas de Rock from the French prosecutor's office told Wired that it is premature to talk about any kind of settlement agreement. Over 5 months after his arrest, the founder of Telegram remains in France, leaving the company in uncertainty about potentially replacing its leader. The Strategy World 2025 Bitcoin event for corporations is set to take place on May 5th through 8th in 2025 in Orlando, Florida. You can check out the event's website here, and there's a link in the article, which will be in the show notes. And that about wraps it up. Moving on to Hodler's Digest for February 2nd through 8th. We'll see what the top stories are here. SEC seeks more time to mull options on Ethereum ETFs. Don't care. Haley Welch, aka Hawk Tua, speaks out after nearly 2 months. Well, this sounds kind of interesting. Haley Welch, widely known as the Hawk Tua Girl, made her first media appearance after nearly 2 months of silence, following the launch of the Hawk meme coin and the subsequent crash of the token's price. In a leaked interview conducted with YouTuber FaZe Banks, Welch claimed the project manager for the meme coin told her the token would have a long-term time horizon and would be positive for the crypto space. Welch said she initially did not want to launch the meme coin and was unfamiliar with the asset sector, but did so because she was told half the money from the token would go to her charity. Oh well. Alex Mashinsky requests a 1 month delay for sentencing hearing. Roughly 2 months after pleading guilty, former Celsius CEO Alex Mashinsky has requested a delay in his sentencing hearing, which is scheduled for April 8th. In a February 5th filing in the U.S. District Court for the Southern District of New York, Mashinsky asked the court to push his sentencing hearing from April 8th until May 8th. According to the former Celsius CEO's lawyers, Mashinsky was simultaneously being pulled in a number of directions uh, amid his guilty plea in criminal court and litigation in bankruptcy court. The defense wants to ensure that it has sufficient time to prepare a sentencing submission that accurately presents Mr. Mashinsky's views on his offense conduct, along with many other factors to be considered by the court in weighing an appropriate sentence, said the filing. Let's see. Kanye West claims to have rejected a $2 million offer to promote a crypto scam. Kanye West, who now goes by Ye, said he rejected a $2 million offer to participate in a crypto scam. The scheme allegedly involved him posting a fraudulent crypto promotion to his 32.6 million followers and claiming his account was hacked hours later. By that point, victims could have already lost significant sums of money. I was proposed $2 million to scam my community. Those left of it, I said no and stopped working with their person who proposed it, West said February 7th post on X. The offer promised West an upfront payment of $750,000 to share the crypto promotion and keep it live for 8 hours, after which he could claim his account was hacked and that he didn't make the post. This would be followed by a $1.25 million payout 16 hours later. Wow. That is just ridiculous. And top prediction of the week, alt season ended in 2024. Bitcoin dominance should hit 71% before it returns. Bitcoin dominance of the overall crypto market needs to pass 70% to restart alt season, a new analysis says. In his latest X post, popular trader and analyst Rect Capital warned that the most recent alt season has already finished. Bitcoin market capitalization dominance spiked to near four-year highs this week as altcoins took major losses amid a broad risk asset rout. Dominance reached 64.3%, data from Cointelegraph Markets Pro and TradingView confirms, before returning to circle 61%. As Bitcoin price strength held up better in the face of macroeconomic uncertainty, attention began to focus on the altcoin market's prospects going forward. Yeah, the shit coins. Stay away from them, folks. Coinbase to face lawsuit over unregistered securities sales, judge rules. A U.S. federal judge has rejected Coinbase's argument that it does not meet the definition of a statutory seller under federal law, forcing the cryptocurrency exchange to face an investor lawsuit in the state of New York. According to a February 7th Reuters report, U.S. District Judge Paul Engelmeyer has compelled Coinbase to face plaintiffs' allegations that it sold securities without registering as a broker-dealer. Specifically, the plaintiffs accused Coinbase of selling 79 cryptocurrencies that were securities without proper registration. As Cointelegraph reported, the class action lawsuit was initially dismissed in the District Court of Southern New York in February 2023. However, the Circuit Court of Appeals revived parts of the lawsuit more than 1 year later. Bitcoin Reserve may end up a potent political weapon, according to Arthur Hayes. We'll go into that in a little bit more detail later. U.S. Treasury sued for giving Elon Musk's Doge access to sensitive information. Union groups have sued the U.S. Treasury, accusing it of breaking federal laws by giving Elon Musk's Department of Government Efficiency enforcers access to sensitive financial and personal information. The American Federation of Labor and Congress of Industrial Organizations, or the AFL-CIO, the country's largest union group, sued the Treasury and Secretary Scott Bessent in Washington, D.C. federal court on February 3rd to stop what it alleged is an unlawful, ongoing, systematic, and continuous disclosure of personal and financial information to Musk and Doge. The scale of the intrusion into individuals' privacy is massive and unprecedented, the AFL-CIO said. People who must share information with the federal government should not be forced to share information with Elon Musk or his Doge. Hmm. I don't know how I feel about that, to be honest. On the one hand, your information's already out there. On the other hand, why do you want to give it to somebody else? Privacy, and all that. But I don't know. We'll see what happens with that. That's why we have the courts, I guess. Next up is from CoinDesk. This article is entitled "Bitcoin Worth 1.6 Billion Leave Exchanges in Biggest Bullish Outflow Since April," according to a research analyst. On Wednesday, centralized exchanges registered a net outflow of over 17,000 Bitcoin, worth more than $1.6 billion at the going market price of 98,600, according to Glassnode data shared by Andrew Dragosh, head of research Bitwise. That's the biggest single-day exodus of coins since April 2024. Whales are buying this dip, Dragosh said on X, referring to the large outflow of coins. Investors typically take direct custody of coins when planning to hold them for the long term. Hence, a large outflow of exchanges is taken to represent bullish sentiment. Note that blockchain data, though widely used to assess market conditions, can be skewed by internal wallet transfers by exchanges. Coinbase alone processed net withdrawals of over 15,000 Bitcoin per Dragosh. Analysis by TimeChainIndex.com shows Coinbase on Wednesday split four addresses totaling over 20,000 Bitcoin into 60 addresses, which hints at a possible major purchases by ETFs or MicroStrategy this week. We have very high certainty that it is a cold wallet, Glassnode told CoinDesk. On-chain data compiled by CryptoQuant shows that all crypto exchanges had a cumulative negative net flow of 47,000 Bitcoin on Wednesday, with 15.8K of that being attributed to Coinbase. Bitcoin fell below 96,800 during Wednesday's late U.S. trading hours, only to turn higher early today after Eric Trump, the son of President Donald Trump, encouraged the family-linked crypto platform World Liberty Financial to make its first Bitcoin investment. Next up from BitcoinNews.com, Trump's crypto czar David Sachs talks Bitcoin reserve. David Sachs, President Donald Trump's new crypto czar, is taking a different approach to digital assets over the past few weeks. Sachs has been very clear on two main priorities: a U.S. Bitcoin reserve and stablecoin legislation. Sachs' public appearances are a big shift from the previous administration's digital asset stance. Under President Joe Biden, the industry was hit with what many in the community saw as regulatory persecution, dubbing it Operation Chokepoint 2.0, with companies like Coinbase, Kraken, and Binance facing legal battles and unclear regulations. Sachs has gone on record to say the war on crypto is over. He's criticized past enforcement actions by agencies like the Securities and Exchange Commission, saying unclear regulations force digital asset innovation offshore. Now the Trump administration is focused on clarity. Sachs told CNBC they are very committed to moving legislation through the House and Senate this year in order to provide that clear regulatory framework that the digital assets ecosystem needs to sustain innovation in the United States. One of the topics Sachs has talked about most is a national Bitcoin reserve. President Trump has asked his working group to look into whether the U.S. government should hold Bitcoin as part of its financial strategy. The feasibility of a Bitcoin reserve would be one of the first things to look at as part of the internal working group at the administration, Sachs said, but he was quick to point out that no decision has been made yet. This is a big change in U.S. financial policy. Traditionally, the Federal Reserve has relied on gold reserves and treasury bonds to stabilize the economy. But with Bitcoin becoming a store of value, some officials see an opportunity to hedge against inflation and economic uncertainty. Sachs made it clear that the president instructed them to evaluate a Bitcoin reserve specifically, which is separate from a broader digital asset stockpile Trump initially considered. So for now, the working group seems to be focused on Bitcoin, not a mix of cryptocurrencies. Alongside Bitcoin, the administration is prioritizing stablecoin regulation. Senator Bill Hagerty has introduced a bill to establish clear rules for stablecoin issuers so stablecoins are backed one-to-one with reserves like US dollars or treasury securities. Sachs agrees and says stablecoins could help maintain US dollar dominance. A clear stablecoin regulatory framework could create massive dollar demand and lower long-term interest rates. The bill requires stablecoin issuers to meet strict requirements, including licensing, reserve audits, and anti-money laundering compliance. It also prevents issuers from using customer deposits for lending or other financial activities, so users are safer. Besides legislative efforts, the SEC is getting a new approach under new management. Commissioner Hester Pierce, now in charge of the crypto task force, admitted the agency's past approach was a mess. Pierce said the agency will create a regulatory framework that balances investor protection with industry innovation. The SEC will now define which digital assets are securities, create a clear process for token issuers, and make sure compliance rules don't kill innovation. For now, the fate of a national Bitcoin reserve is unknown, but one thing is clear: the Trump administration is determined to assess the possibilities, and Bitcoin is closer than ever to becoming a key part of the U.S. economic plan, positioning the country as a leader in digital finance. And so we will just sit back and watch and see what happens on that one. Can't really stop anybody from participating in the Bitcoin network. I guess that's the beauty of it, right? Uh, so for a counterpoint, I thought this would be interesting. Article from Bitcoin.com news. Arthur Hayes warns of Bitcoin crash if U.S. creates strategic Bitcoin reserve. Arthur Hayes, former CEO of crypto exchange BitMEX, published an essay on February 5th where he critiques the idea of a U.S. Bitcoin strategic reserve and regulatory policies surrounding crypto under the Trump administration. He argues that many in the crypto industry mistakenly believe government intervention will benefit them, stating, Broadly speaking, many misguided crypto folks wish for the US government to print dollars and purchase Bitcoin as part of the national stockpile and to enact regulatory moats around crypto businesses in which they have a financial interest. Hayes warns that government controlled Bitcoin reserves would be subject to political whims rather than sound financial strategy. He detailed, let's assume that Trump is able to create a BSR. The government buys 1 million Bitcoin as suggested by US Senator Lummis. Boom, the price goes nuts. Then the buying concludes and the up-only trend channel stops. He warned that the move would create short-term volatility instead of long-term stability and noted that a future administration, especially a Democrat-led one, might view Bitcoin reserves as a readily available source of liquidity. The former BitMEX executive cautioned, there are 1 million Bitcoin just sitting there ready to be sold. It takes just a signature on a piece of paper. The market would rightly fear when and how those Bitcoin would be sold. Hayes expands on this risk, explaining that political motivations would dictate the buying and selling of Bitcoin rather than economic strategy. What could be bought can be sold. The fundamental problem when a government stockpiles any asset is that they buy and sell the asset primarily for political and not financial gains, he wrote, dismissing the idea that US policymakers would view Bitcoin as anything more than a tool for appeasing their base. He's not wrong there. I mean, if you think about the Strategic Petroleum Reserve, you know, they sold that off just to bring down the price of gas, and that was totally political, and took it down to a level, very, very low level, which probably wasn't too smart. Instead of enhancing Bitcoin's role as a decentralized asset, he argues, government involvement would create uncertainty and potentially cap enthusiasm in the market. Instead of government stockpiling, Hayes proposes an alternative strategy in which the US Treasury gradually integrates Bitcoin into the financial system by using it as a reserve asset rather than holding it outright. He suggests a progressive devaluation of the dollar against Bitcoin, ensuring that the asset's value increases while maintaining dollar supremacy in trade. Hayes also advocates for a legal framework that protects Bitcoin as a form of speech, ensuring that miners and blockchain participants can operate without government interference. Despite Trump's apparent friendliness towards crypto, Hayes remains skeptical of meaningful policy changes, predicting a potential retrace of Bitcoin to the $70,000 to $75,000 range unless the Federal Reserve or US Treasury enacts monetary stimulus or favorable legislation. He urges crypto holders to take an active role in shaping policy rather than passively expecting politicians to act in their favor, warning that otherwise crypto regulation will be dictated by those with financial interests in maintaining centralized control. Um, can't really disagree with him here. I mean, he makes a lot of good points. So again, can't really stop what's going to happen. So all you could do is just sit back and watch, and volatility is fine. Just play the long game. Okay, next up is from Bitcoin News. A little bit more detail on MicroStrategy, Strategy B now, as they're called, uh, since they changed their name and logo. MicroStrategy, the business intelligence company and the largest corporate holder of Bitcoin, has officially changed its name to Strategy and made some changes to its logo. The company made the announcement ahead of its Q4 earnings report, showing a major and irreversible pivot toward Bitcoin. Michael Saylor, co-founder and executive chairman of Strategy, highlighted that simplifying the company's name was a natural evolution. He said, strategy is one of the most powerful and positive words in the human language. It also represents a simplification of our company name to its most important strategic core. Fong Li, president and CEO of Strategy, added, our new name powerfully and simply conveys the universal and global appeal of our company and the value we bring to the strategies of our shareholders, customers, partners, and employees. Along with the name change, the company launched a new logo featuring a stylized B for Bitcoin. So now the company logo reads as Strategy B. The brand's primary color is now orange for energy, intelligence, and Bitcoin. The rebrand also resulted in the launch of new websites, one of which is for its AI-powered business intelligence software at strategysoftware.com, and another for its merchandise store at store.strategy.com. Strategy has been focused on Bitcoin for years. The company started buying Bitcoin in 2020, raising billions of dollars through equity and debt to add to its Bitcoin holdings. As of the latest report, Strategy has 471,107 Bitcoin and is the largest corporate holder of the scarce digital asset in the world. Andrew Kang, Chief Financial Officer of Strategy, said Q4 2024 saw the company's biggest ever Bitcoin purchase. The fourth quarter of 2024 marked our largest ever increase in quarterly Bitcoin holdings, culminating in the acquisition of 218,887 Bitcoins, he said. Despite having many Bitcoin, Strategy's stock has been volatile. It fell 3.3% in after-hours trading following the rebrand and earnings announcement. But it has been up 586% over the last year thanks to its Bitcoin strategy. The company's Bitcoin focus has led to its stock moving with the price of Bitcoin. Financial analysts are divided. Some like the vision, others warning of risks. Mizuho Financial Group recently initiated coverage on Strategy with an outperform rating, calling it a lever for the believer in Bitcoin, but others say it's a premium that won't last. Although Strategy has pivoted to Bitcoin, it still has its enterprise software division. The software business had a tough quarter with revenue down 3% to 120.7 million from 124.5 million last year. Despite their deep focus on Bitcoin, the brand and legacy software business still has big clients like KFC and Hilton. Strategy has big goals for 2025. The firm has introduced new KPIs like BTC gain and BTC dollar gain, which measure its ability to buy Bitcoin in a way that benefits shareholders, targeting a BTC dollar gain of $10 billion in 2025. BTC gain is the number of Bitcoin the company has at the beginning of the period multiplied by the Bitcoin yield for that period. The BTC dollar gain is Bitcoin gain translated into dollars using the market price of Bitcoin as of 4 p.m. Eastern Time on the last day of the quarter using the rate Coinbase Exchange provides. Meanwhile, the Bitcoin acquisition strategy continues. Strategy just raised $563.4 million in a preferred stock offering and will use the proceeds to buy more Bitcoin and for general corporate purposes. And finally, Bitcoin's making it in the mainstream. This is from the Motley Fool. I thought it would be kind of fun to read this one and see what they have to say. This recent development could be a game changer for Bitcoin. Uh-oh, what are they talking about? According to a new research report from Fidelity, 2025 could be the year that central banks and sovereign governments around the world start buying Bitcoin. That's a significant change, given how much money might flow into Bitcoin. In fact, the amount of money flowing into Bitcoin might even surpass the amount that has already arrived via the new spot Bitcoin ETFs. If that's the case, then Bitcoin might skyrocket in value, but just how likely is this scenario? Let's take a closer look. It's perhaps no surprise what led to this recent development of central banks and sovereign governments buying Bitcoin, a proposed plan by the US government to launch a strategic Bitcoin reserve. While the US government already ranks as the largest sovereign holder of Bitcoin in the world, there has never been any formal strategy in place to acquire crypto. The creation of a strategic Bitcoin reserve would change that. According to the Bitcoin Act of 2024, the US could purchase as many as 1 million Bitcoins over a 5-year period. That's equivalent to 5% of the total circulating supply of Bitcoin. That would, in essence, make the US a Bitcoin juggernaut. And there are even more aggressive estimates for how much Bitcoin the US might buy. During the 2024 presidential election, then candidate Robert F. Kennedy Jr., currently nominated to be the US Secretary of Health and Human Services, proposed that the US should buy 550 Bitcoins every single day until it had amassed a total of 4 million Bitcoins. That scale of Bitcoin buying, of course, is completely unprecedented. But just keep in mind, there's no clear template for the US to follow, and nobody's really even sure if the strategic Bitcoin reserve will ever be created. Already, the Trump administration appears to be backing away from characterizing this as a Bitcoin reserve and is instead referring to it as a national digital asset stockpile that suggests other digital currencies might be added to the mix. Hmm. Where things get interesting is when you consider what potential impact the creation of the strategic Bitcoin reserve might have on other nations. If the United States, the biggest economic superpower in the world, is buying Bitcoin, then other nations might have to as well. Otherwise, they might be left behind. Fidelity refers to this as political and economic game theory, but longtime crypto investors know what this really is: FOMO, or the fear of missing out. Right now, the best example of a nation strategically buying significant amounts of Bitcoin is El Salvador. It officially made Bitcoin legal tender in 2021 and has been buying Bitcoin aggressively ever since. According to Fidelity, it currently holds 6,000 Bitcoins worth an estimated $600 million. That might sound like a lot of Bitcoin, but a single US company, MicroStrategy, holds as much more than that. As of January 2025, MicroStrategy held 471,170 Bitcoins, and the US government, simply as a result of asset forfeitures and seizures, holds 198,000 Bitcoins. If the US moves forward with plans for a strategic Bitcoin reserve, it might buy 200,000 Bitcoins in a single year. Keep your eye too on what's happening in Europe. In early February, the head of the Czech Republic Central Bank suggested that it might start buying Bitcoin. Current proposal is to buy $7 billion worth of Bitcoin, which is equivalent to approximately 5% of the Czech National Bank's international reserves. If that plan moves forward, it could lead to other European nations buying Bitcoin. The suggestion that Bitcoin could double in value as a result of all this new buying by central banks and sovereign governments might sound, well, far-fetched. Fair enough, but consider what happened with the new spot Bitcoin ETFs and what impact they had on the price of Bitcoin. In just a single year, these spot Bitcoin ETFs accumulated approximately $100 billion in assets under management. If we assume a price of 100,000 for Bitcoin, that's equivalent to roughly 1 million Bitcoins. That 1 million Bitcoin figure should sound familiar. That's exactly the same amount of Bitcoin that the US government plans to buy for its strategic Bitcoin reserve. And we all saw what happened when so much buying of Bitcoin occurred. As soon as the new spot Bitcoin ETFs launched, the price of Bitcoin skyrocketed by 122%. Bitcoin literally doubled in price from 44,000 in January 2024 to over 100,000 by December. You can see where I'm going with this. The trend of central banks and sovereign governments buying Bitcoin could be much bigger than anyone thinks. It quite literally could be a game changer for crypto. The rules of the global financial order would change, creating an entirely new game. The winner, of course, will be the nation that owns the most Bitcoin. So a little hopium to finish the podcast. And, when you start seeing it in the mainstream, uh, look out, because the retail investors are who have notably been absent, I think, so far in this cycle, are going to be probably coming in. And I did want to end with this week's featured post on Bitcoin Fortress Substack. It's entitled "Some Thoughts on the Recent Digital Financial Technology Executive Order." And I will include a link to that in the show notes, along with all the other articles I reviewed. Weekly top boost on Fountain at God's Death with 536 sats. Thank you, sir. And with that, I will thank you all for listening to the podcast. If you enjoyed the show, please like and leave a comment. Don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack at bitcoinfortress.substack.com, and you can follow me on Nostr. My NPub is in the show notes. Just search for it on your favorite Nostr app, Damus or Primal or whatever you're using. And with that, I will talk to y'all next week. Bye bye.